Okay, so you were declined. Can I help you? 100%. Let's look at the 5 top reasons why a bank mortgage approval is declined. Most likely you're gonna have one of these 5 applied to you, and we'll see what are the next steps in order to help you out. Number 1, super simple, not enough income. You don't have enough earnings, or your income verification is not adequate, so you don't have enough documentation. Very common that a person who is self-employed cannot get a mortgage because they don't show in their tax returns enough income. So those are some of the typical issues. Or maybe you've been only not too much in your existing employment, so the bank declined you. All of those things a lot of times can be overcome. We just have to go deeper or to find a solution to present the right documentation. Sometimes there's other lenders that may require less documentation, or maybe they will make an exception on the document based on your history of employment. So this is the number 1 reason. And number 2, not enough equity or down payment. In this case, if you're buying a property, it's a down payment. If you're refinancing, it's the equity in the property. Maybe the appraisal come in lower. Maybe you try to refinance and you don't have 20% equity, which is required for most mortgages. Sometimes those have no solution, but sometimes there is solution. Especially if we can talk to another appraiser and look to another appraisal company, or in the case of a down payment, if you don't have enough income, if the income is strong enough, you could have a line of credit as part of down payment. Even if you're a business owner, we can also help you out with a business line of credit to provide for the down payment. Those are the normal reasons why most people may get declined on this topic. Number 3, credit history. Your credit score is low. You have derogatory payments, or your credit report has incorrect information. A lot of these times we can overcome that, especially if you allow us some time to guide you through the process of getting your credit history repaired, or we can also help you go to Equifax or TransUnion and update your real liabilities, because these companies are not perfect and the liabilities could be wrong, and all these misunderstandings make the credit history not be accurate, and that could derail your application. So all of these issues can be solved, but we need to get into the details of your mortgage approval. And number 4, too many liabilities. This is very common as well. Things happen in life and there's a lot of debts. We may need to consolidate some of those debts. We need to bring them to a lower payments. Banks, in most cases for mortgage approval, do not care about the interest rate that you're paying, but they do care about the payments that you're making on visas, lines of credit, or car loans or leases. So in order for you to get a proper approval, we will need to lower those payments somehow or consolidate them so they don't derail your mortgage application. Just to give you some sort of an idea, let's say $450 a month car payment, either on a loan or on a lease, it's equivalent to $100,000 in mortgage approval. So if you get a car that is worth $20,000 and you have a $450 a month payment, that means that your approval may get reduced by $100,000 because you bought that car. It's always better to purchase a car or to get into a lease after you've gotten your mortgage. If you do that before your mortgage, it will affect a lot the amount of money that you can borrow for your next home or your rental property. Now, number 5, The property. There's tons of things that can delay the application for a property. Perhaps it's a leasehold property, so the owner or you will not own the land, only the buildings. A lot of lenders don't like those type of contracts. Maybe there are situations in the property that will delay the application. Maybe the property is too old. Maybe there's only land value, so the building is not worth too much. So the lenders don't like that. And also there's location concerns. Maybe it's located in an area where that lender may not lend. So all those things could be troubleshoot with other lenders or with exceptions. Now, as a summary, if you should know why the bank declined your application. If your bank declined your application because one of those 5 issues, please connect with our office, because we want to troubleshoot and see if there's another lender or another possible solution, restructuring the loan or providing more documentation that will make your approval happen. So 1 out of 5 is very doable. If the reason why you got declined is 2 out of 5, means that perhaps the debt servicing ratio is too much, and also you have issues with your credit history, it becomes very challenging. There is solutions, but at higher rates. And when I propose a solution with a higher rate, have in mind that this solution will be for short term. What I mean by short term is 1 to 2 years in most cases, because that time will allow us to troubleshoot those issues and get you back into lower rates. Now, if you have been declined because 3 of these 5 become a problem, it's kind of, I never want to say impossible, but it's not feasible at the moment to get you an approval, because there's too many issues that the banks look at where you do not apply. Now, in those cases, we can set you up with a plan so we can overcome 1 or 2 of those 3 and then get you back into a mortgage loan. My name is Camilo Rodriguez. I am a mortgage broker. I'm the past president of the BC Mortgage Broker Association, 22 years of experience, licensed in British Columbia, Alberta, and Ontario. I'm super passionate to help people build wealth through debt. All the best.